Hello and welcome to the Look Ahead with me, Fiona Sincotta, Senior Market Analyst at City Index, looking ahead to tomorrow, Friday, the 31st of January. So overnight, we'll be expecting inflation, Tokyo inflation from Japan. Then in the European session, we have German retail sales, also unemployment and inflation from the Eurozone's largest economy. In the US session, we'll have US core PCE, Canadian GDP, and then earnings from ExxonMobil and Chevron, as well as many others. So just kicking off then with inflation, big day for inflation tomorrow. It's all about inflation. Tokyo inflation overnight was expected, the core CPI there is expected to tick higher. Now, it's important, Tokyo inflation, because it's often considered a lead indicator for the nationwide inflation. So we're expecting that to tick higher to 0.5% month on month, 2.5% up from 2.4%. That's annually. Obviously, this comes after the Bank of Japan raised interest rates last week by 25 basis points to the highest level in 17 years. But they failed to really give too much guidance about further rate hikes. So if we do see a continued uptick in core inflation, then that could continue to drive rate hike expectations, which could be supportive of the yen. Then we've also got US core PCE, that's the Fed's preferred gauge for inflation, and that is expected to come in. The core inflation is expected to continue easing to 0.2% month on month and down to 2.8% annually. Headline inflation is expected to be a little bit higher at 0.3% month on month. Now, obviously, this data comes after the Federal Reserve left interest rates on hold at 4.25 to 4.4% on Wednesday. Then today we've also had GDP data, which actually was a little bit weaker than expected, coming in at 2.3%, down from 3.1% annualized in the third quarter. So this chart here, we're looking at the USD Japanese yen. Now, just remember that from the Fed, we heard that the Fed were leaving interest rates on hold. They highlighted the resilience of the US economy, the labor market, and that inflation was still a little bit elevated. So really, they feel like they have time on their side before needing to cut rates further. And indeed, with the uncertainty surrounding Trump's policies, there may not be any need to cut rates for some time if he chooses to implement inflationary policies. But anyway, for now, that's not the case. We've got the US dollar, Japanese yen is actually falling, as we've seen a strengthening in the yen over the past few weeks, but also a weakening in the US dollar after the data today. And obviously after Trump has failed to or refrained from implementing aggressive trade tariffs, which has mean that the inflationary outlook, as far as the market is concerned, has eased slightly, which is pulling the US dollar lower. Just having a look at this chart, we saw USD Japanese yen run into that resistance around 158.80. Has since then been forming a series of lower lows and lower highs, breaking below this trend line that dates back to the low of 2024. And also taking out the 50 SMA, which is around the 154.90 level. So it's just below there now at 154.30. Levels to be watching out for. I mean, this level here, the 154 level, is sort of what we've been seeing as just holding up these candles here. But then we've also got around here quite a few support levels in place. We've got the 61.8 Fibonacci retracement level from the 162 high to the 139.50 low. And that's also, that level's here around the 153.30, 153.40 level. And we've also got the 200 SMA at 152.85. So around that sort of zone, there's quite a lot of support that sellers will need to break through in order to gain momentum towards that 150 level. On the upside, buyers are going to need to get above the 155 really to make any form of recovery towards the 156 85 level, which was the high that we saw in last week. So that's the levels to be watching out for there. Just whilst we talk about the US, let's just take a look at what's happening in the stock markets. Obviously, we've had earnings from big tech. Apple hasn't yet reported, but we have had Tesla, Microsoft, Meta. Bit of a mixed bag, really. Bit of disappointment. Microsoft fell 4% after its earnings, despite beating both on revenue and earnings. But there was a little bit of disappointment surrounding its Azure earnings growth, revenue growth, sorry. Tesla, again, actually disappointed in its numbers, but optimism surrounding the outlook for the year ahead and a cheaper model has pushed the share price higher. And Meta was also up after earnings. So just having a look at the NASDAQ, we're seeing this doji candle here, which suggests a bit of indecision. We're holding above the 50 SMA, which is an encouraging sign. That's been a level that's been relatively important across the last few months. So as long as we can hold above that 50 SMA, that's quite an encouraging sign. But we do have the RSA pretty neutral. So a little bit of indecision. It's almost as if the market's waiting to see what comes next, which is quite interesting given that we've just had a Fed meeting, GDP data, big tech earnings, and obviously we've got the inflation figures tomorrow. So on the upside, we're looking for a breakout above here, 21,900. That's going to open the door to 22,100 on the upside. And then if we got to break below that 50 SMA, watching out for this level down here. That'll be the next support at 20,750. If we get a break below that, that creates a lower low. Just moving on, obviously we've got a lot of German data coming out tomorrow. This is Euro, US dollar. Germany had their GDP figures out today, and we also had the ECB rate decision. ECB very as expected, left interest rates on hold they didn't. They cut interest rates by 25 basis points in line with expectations. Nothing that caught the eye of the market there. The euro is pretty much unmoved, a little bit higher than it was heading into the meeting. Obviously, there are still concerns around growth. German GDP came in, showed a contraction, stronger than expected contraction of 0.2%. But inflation is expected to be a little bit higher, a little bit stickier. Inflation tomorrow from Germany is expected to be 2.6% year on year. But on a monthly basis, we are just expecting 0.1% after 0.5% in the previous month. So that does suggest that maybe inflation is just coming in a little bit weaker on a monthly basis. But, inflation, not really too much of a problem. I don't think. The ECB did say in their December meeting minutes that they expect inflation in the region to be back to target level by the middle of this year. So just as far as Euro US dollar is concerned, we've obviously seen that trending lower. It hit that low there of the 101.77. Have seen a recovery. We're still finding it actually it's respecting the rising channel. Not really doing too much at the moment. Again, we've got a little bit of indecision. It's flat on the day. Buyers are going to really need to get above that 104.60 level. That's the level that we saw. Sorry, that's the 104.60 levels. That's the level that's been relevant just a sort of at the end of December and in the beginning of November. Rise above here is needed for a higher high. That's the 105.30 level. 105 again on the upside is another key figure to be watching out for in order to rise to 106. On the downside, if we do get below this level, this is the 104. This is the low that we've seen today. It opens the door here to the 103.30, which is the November low. Really interesting just to have a quick look at what's going on at the DAX. DAX is just powering on to fresh all-time highs after the ECB rate decision. Very much in overbought territory. Doesn't seem to be that bothered right now. Still pushing on higher. So 22,000 is the levels we're watching on the upside. We may see a period of consolidation. Obviously, it's breaking out of a rising channel there. But yeah, as I said, blue skies above. So 22,000 be the next logical level. On the downside, this one here, this is Monday's sell-off, the low at 21,000. On the downside, a little bit of support. But really, this chart is bullish as long as the price remains above 20,500. Below there, we could see a more neutral stance on the DAX. DAX obviously been boosted by expectations that the ECB is going to be continuing cutting rates, which is more beneficial for companies in Germany. So excellent. That is everything that we'll be watching. I hope that you've enjoyed what we've seen, and I'll see you again tomorrow.